The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to have some rocking and rolling, folks. We're over this major thing with Mercury going direct, and that is something very, very unusual in cycle world. But we do have this full moon coming up next week, which might be a trigger. But of course, the elections in France will be one of the biggest triggers. We'll get into the euro just a little bit, but we really should focus on a couple of markets that are really completing some major stuff in here. And I think what we'll do is we'll take a look here, of course, at the heating oil market. As you recall, we had a price pattern in the we did the DAX up here, folks. I put up the DAX to show you what it's doing on a 15-minute chart, so you can take a look at that one. And but we'll look here at the heating oil. What we were looking for as we came into this week was a possibility that we were going to get down to this 136.40 level. That was what we were looking for. And as you can see here, when you take a look at what heating oil has done, you'll notice that it went exactly to the exact price. I mean, it was just absolutely spot on at that 138 and change. We've already rallied 5 cents a gallon in heating oil, and whether that's going to be the bottom or not, I'm not sure. But that hit a perfect 78% retracement of the low from back in August. And so that's another important. It's also, just a little below a little above the 382 level. So let's try that again. A little above the 382 level from the move way back in January, and that makes this the first ABCD pattern. And as Gartley said in his book on page 221, the best trade to do for trading in the trend is to buy the first ABCD corrections in bull markets, and of course sell the ABCD corrections in bear markets. That's what he was looking at as he was going through some of the things that should be going. Now, this doesn't mean if we go below those levels, then it has no it will have no friends at all, for sure. But right now it's certainly got a chance here to make a level that would have some very interesting spots, to look at it from support. Yeah, the crude oil did exactly the same thing, and if I can find it, and I just charted it, I just sent it, and I don't know where it is. I'm just looking for it now, and well, let's shut the door and raise the rent. Hold on just a second here. Well, I don't seem to have it, folks, so I'm going to have to, boy, what did I do? I know it's here somewhere. Well, let's not worry about it. Let's move in to the precious metals, because here again we're looking at some very interesting things. As you recall, we were looking for silver to get down to this level of the $16.34 an ounce level. We're trading a little bit below that there, but we're very, very close. My assumption is that this big cycle that was here yesterday was probably what pushed it down a little bit more from the emotionalism that is there. I'd like to see these numbers hit the exact number, and they don't always do that, of course. But as long as we can stay above that 1620 level in July silver, it's got a pretty good chance of making a really nice move. But remember that these things can change rapidly, and that's why you've got to be careful. Besides this is a Friday. It's going to be pretty hard for anybody to be bullish on gold and silver on a Friday, and that's primarily because of the fact that we are looking at something that over the weekend that could be very, very scary to these metals, and that's that election that we're looking at. But if we take a look here at what we were watching in gold this week, you'll notice that what we were looking for here was to see that the market would repeat what it did during February and March. And folks, it did it exactly. We went right down to that level that we should have stopped at in gold. If you'll notice those little red ABCD swings in there, we hit this spot on yesterday. So far that has held. That is also just a little above the 3.8, little below the 382. It's 0.44 was the retracement from back in December when we hit 1122. So we're still $100 an ounce higher than we were in December, and we are completing a beautiful retracement, very similar. In fact, right now they're perfectly similar between the BC swing of the first move and BC swing of the second move. And of course, this holds here. This sets up an $80 rally that would take us up to around the 1300. And if we break out of 1300, then all bets could be off. So we need to watch the gold and silver here, very, very closely, because it should be moving, but it doesn't necessarily mean that it's going to be moving today. That's the main thing to look at. The same thing is true in the silver market. Let's just put this up here so we can see it. And I am going to put that crude oil chart up if I have to go out to Tombstone to pick it up. Hold on just a second. I want to get this chart in of the silver market. You can see where we are in silver, the importance of that level that we had. Whether this is going to be the bottom or not, I'm not sure, but there's a lot of things that are suggesting that this could be the bottom. And remember, I'm saying suggesting. I'm not saying that it looks like it is the bottom, but it could. One of the things that I see that might make it be the bottom is if we take a look at the platinum market. I just want to bring this platinum chart up here to show you what's happened here from where we were looking for. The platinum was much, much weaker than gold. But folks, things have changed in the platinum market. It is no longer weaker than gold. It actually gapped up $10 this morning. So this is a very possible, very interesting pattern here in platinum that could be signaling the fact that maybe this gold and silver move has legs. And this is we're within 1 day of the cycle, so anything could happen. And with this French election, holy cow. It's just anything could happen, especially when it's this far oversold in gold and silver. There could be just a one heck of a short covering rally, or on the second part of the coin is that this thing is really, really bearish, and the old cowboy is missing it. And believe me, I miss some more than I would like to see. But the next one we want to take a look at is the XAU, and then we're going to look at the Bull Bear Index too. You'll notice here the XAU has made a double bottom from where we were in March. It's been much, much weaker, of course, than the dollar index. The gold silver index has been much weaker than the gold itself. So this is a possibility here that we've made some type of a double bottom. And again, it's spot on at the 78% level from last December when we made the 3 drive to a bottom pattern. So that's another one that looks interesting, that we should take a pretty close look at gold and silver here at these levels. So we'll be right back and cover the Bull Bear Index, 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we're going to take a look at the HUI, that is the Bull Bear Index. I have never traded this. I look at it because it's an indicator of the bullishness or bearishness out in the market. As you can see, this index is actually looking pretty good from a technical basis. We've just completed a Gartley pattern yesterday at a much higher level. It looks much, much better than it does with the XAU, of course. So this is another reason to pay close attention to what's happening, with the gold and silver at these levels. I'm just saying this could be a pretty good bottom, but again, Sunday night, this all could change, very, very easily, considering, that we have this wild volatility that we've seen on some of these election nights. So that's pretty much what we're watching here. Now, let's take a quick look at the crude oil. I finally found it. It was at a very unusual place. It was right in front of me. So as we look here at crude oil, this happened, of course, late in the afternoon yesterday. And as you can see, we went down and made a 78% retracement, a little bit below that from November, but we almost made a perfect spot on 61% retracement. But the important thing here, folks, is if you'll look at that candle that is right there, that is a hammer. That's the opposite of the shooting star. It's one of the more positive, chart candles that you could ask for when you're over what we think is a major cycle low. The other thing that's very interesting is that if you measure the ABCD pattern from December to where we are right now, that is a perfect spot on ABCD pattern. It's just, it's got everything there that you could possibly ask for. So this is indeed a Gartley pattern. And of course, if oil goes below 43, my feeling is it's going to 35. So watch it right here. We've rallied $2 a barrel very, very quickly, which is a good sign for a possible bottom coming in. But again, it's a little bit early, and of course we're forced with these to look at these elections. Frankly, I don't know if it's going to make a whole lot of difference, but what happens is the people react to what they think they're going to see, and that's what's going to be looking at of what we're watching on these things, because it's how the people react to what they're looking at. Hey, when Brexit was going on over there, I was there in May of last year, right before the election, and the folks that invited me there, they were saying they were going to leave Brexit, and yet the bookies were given 9-to-1 odds that they were going to stay, and you can see how wrong they were, much like they are in some of these other polls. So these polls are just what they say they are. They're not always what you think they're going to be, that's for sure. Anyway, let's keep an eye on these metals, because we are at a real critical level in most of these things, without any question of the doubt. I mean, the gold did exactly what it should have did. Silver did exactly what it should have did. The HUI has done what it should have done. The XAU is held above a double bottom at the 78% level. We have that Mercury going direct cycle that hit this week. So all of these things make it look like we're at a really, really important level without any question at all. Now, what I wanted to do is to show you, before we get off on these metals here one more time, is I wanted to show you the platinum chart, because yesterday, as you can see, platinum should have got down to the 876 level. We went below the $900 an ounce level by just a little bit. And now it gapped up $10. It's since given most of that gap back, but still up on the day. But this is another reason to think that there could be a double bottom from December in the platinum also. So this is why we're looking at all of these things. Remember, none of this is based on any fundamentals, folks. This is just the technical aspect of the market, and we believe that the technicals are the sum total of all the buyers and sellers. If prices are going up, there's more buyers. If prices are going down, there's more sellers. That's just about the way it looks. So we'll continue to do this and see if it's going to work. But we do have these events that come out. It will tell us that we're looking at some really, really interesting times. And, of course, that's a Chinese curse, but it will be exciting because of what's going to happen on Sunday night. And the whole world is looking at it, and that makes it even more exciting. So those are the main things that we're watching this morning. Now, what we want to do is I want to get over to the real markets, which are the foreign exchange markets. And I want to talk to you a little bit about one. If you like pattern recognition, and if you like pattern recognition, you've got one here to take a look at this morning. Let me get it ready here. We posted this many times here over the past few weeks, and you'll notice here that we are looking at the Canadian dollar versus the U.S. dollar. And this basically tells you that the dollar is 37% stronger than the Canadian dollar. So, but if you'll notice here, you'll see those three patterns that measure all to this level at this 137.80 level. So, certainly could go higher, no question about it. But we're right up into the zone where, if anything is going to happen, this would be very, very unusual. What's important here from a technical standpoint is if you look at the low that we made back in August, okay, and then we made the high in November, we pulled down to a perfect 78% retracement into January, late January, and that ABCD pattern completed at the exact high last night in the Canadian dollar, U.S. dollar at 137.90, and so that might be it. I don't know, but boy, it certainly got everything that you could possibly ask for. You have three major ABCD patterns completing up at the same level at a time when we have a pretty strong cycle with this Mercury, and also with the Mercury going direct, and also it's at zero declination, which is also a very important cycle. So that's another one that we need to watch very, very closely here, because it has a lot of possibilities to see what's going up. The cattle market has gone. They switched over to cattle. And folks, the cattle market has been really crazy. I think I posted a chart this morning to take a look at it, how crazy it really is. But it was almost limit up to limit down yesterday. And what it's going to do is anybody's guess. But the open interest has been dropping in cattle. That is a negative phenomenon. I don't know how to enter it here, because it's crazy. I mean, you have to put a $1,200 stop on cattle if you're going to trade them, and it's really not necessary. Yes, Norm did show a top on Monday and Tuesday in cattle, and so that's what I would be waiting for. By then, maybe we'll have a little bit better pattern, but all we have now is this limit up and then a gap down and then a rally back up. I mean, that's not for the faint of heart. That means that people are, the shorts are getting out and there's not new longs coming into the market. That is not a positive thing. Maybe it's wrong this time, but from a technical standpoint, you don't have any new buyers coming in, and that's not a good thing to look at. That's the bottom line. When we come back from the break, I'll take a look at this cattle market just to show you what we're looking at, very quickly what we're seeing here. So we'll take a break. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're going to take a quick look here at the August cattle. June is even crazier than this. June got to 134, but you'll notice that we had the big candle to the upside, which was pretty much a shooting star pattern. Then the market gapped down, and this is just not for the faint of heart. It really isn't. It's going to be fun here maybe in a few days when we have a better type of a pattern to look at, but this is not where you really want to make a stand, in my opinion. First of all, I look at the patterns and I want to see a pattern completing. Similar like what we have in the Canadian dollar. We have four major things that tell us that this should be it. By the way, on that Canadian dollar, if you go back and look at it on the weekly, that's making a Gartley pattern from the high we made back at 143. So that's a really positive pattern in the Canadian dollar. That is really a big one. So watch it closely. It's got some very interesting places to look at it. Anyway, anything above 139 would certainly be wrong in that, but right now in the Canadian dollar, it should be making some type of a correction here. But stay away from the cattle. We'll look at this down the road a little bit to see what's going on. We're following the grain markets very carefully now. Because we're watching, these the wet weather that's everywhere, and we'll see how everything comes out. By the way, it is Cinco de Mayo. It is a national holiday from Mexico, and that's their July 4th. And believe me, being only 72 miles from the Mexican border, they're not serving coffee at Starbucks in Tucson. They serve margaritas. So. Happy Cinco de Mayo to everyone. Okay, and everybody likes Jimmy Buffett anyway. All right, let's move on to the next one, and we'll get into since we were talking about the Canadian dollar, let's take a quick look at the U.S. dollar index. This is what we were expecting to have happen. If you'll notice, this is what we were looking at coming into this week, that we thought we were getting ready to pull down into this 97.50 level. And if you look at this chart closely, it shows the disassociation between the U.S. dollar and the dollar index. This is, I think, something very important because you don't see this very often. Usually, as the U.S. dollar strengthens, stocks go up. But the dollar is weakening and stocks are still going up. So there's a disassociation here of an intermarket relationship that probably means something. The problem with technical analysis is I can't figure out what it is. I have to look at each one separately. That's what I'm trying to look at, because if I see it separately, then I know that the pattern is there. That's where I can actually, determine whether I want to make my case for a bullish, or bearish case, and that's what I'm really trying to do. If we take an update of where we are coming in here this morning, you'll notice here that we've had this big bar to the downside yesterday. That sets up, as you can see, the perfect ABCD pattern that is there going back to December down into January. Then you had a 61% retracement up into February. And then you had that three drive to a bottom pattern that should form here at around 97.60, and that might be the thing that brings us into the Brexit thing. And it's not Brexit; it's Frexit now. Frexit is the acronym that they're using. So we'll be watching the Frexit vote here Sunday night. Maybe that's what is going to happen to the U.S. dollar. Let's just make sure that we have this in here for everyone to see. There we go. And then the next one we want to take a look at, of course, is the euro itself, because that is where the fat cats line up. Give me 1 second here, and we will get this thing moving. And we will put the euro in as what we were looking for to come in this week. Let's just put it in here so we can take a quick look at it, and we'll move this around just a bit. There we go. Bada bing, bada boom. Okay, there we go. And you can see that we were looking at this ABCD to form up here around this 1990. That was the spot on number that we hit, right off the bat. So keep in mind that that's, really a good spot, to take a look at this thing come in Monday, because I believe we're going to get probably, if you go back a little bit farther on the euro, we have a real strong probability to get to 110 and change. But we're talking to 109.90. That could be it, folks. And that's the main thing of what we're looking at. Someone's asked a question of why I'm not spending more time on the stock market, folks. That's not where the action is. The action is in the other markets, the real money markets, which are your foreign exchange markets, your gold, silver markets, your crude oil markets. All of those are the ones that look like they're the most interesting. So keep an eye on those. Those are the ones that that will lead you to the promised land if you follow the little white rabbit down the hole and watch your stops and make sure you don't lose very much each time you trade. You'll be okay, folks. You can be wrong a lot of times and then be right once and make pretty good money. But I got a really interesting email from a young man yesterday who had been doing extremely well. He had only been trading a month. He had practiced for quite a while and done well with his practice trading. And then he started to trade, and over a 2-month period, he was just doing incredibly well, to the tune of about 15 or 20%. And then what happened was he got bullish gold at the wrong time and didn't put a stop in, and he gave back almost all of his profits for 2 months on one trade. Now, that in itself, that's not going to get him into the Guinness Book of Records. But what it will do is it will reinforce the importance of what happens when you make a mistake. And Mark Douglas used to talk about this so very much, is in the fact that when you make a mistake and you make money on it, it reinforces negative behavior. And that's the thing that you have to get away from. And this is what happened with him. He had made a couple of small mistakes that turned out okay, so he made another mistake in gold, and that's the one that bit him. And so remember, it's the first mistake that teaches, the second mistake kills. Those are the words from the old master himself, Roy Longstreet. So keep in mind that this is a game of not being right or wrong. It's a game of making money. You can be wrong 2, 3, 7 times in a row if occasionally, and still when you make it on the 8th trade, that's the one that makes it all the best. We will be doing I'm going to be trying to do a special update this weekend on the grain markets, because folks, these puppies are poised to run. I can, when you look at these charts, what they do is they give you a sense of what's really happening. And the more bearish news that comes out, the more bullish the market looks. And that in itself is related to what's happening with the rain across the Midwest. But boy, these markets are acting more like demand markets. In other words, people want to buy this stuff. Maybe it's because the U.S. dollar is getting cheaper, and they can buy our grains a lot cheaper. But all of them are looking interesting. Especially starting with the soybean oil market looks extremely interesting. If we can get soybean oil above the $33 a pound level, it's going to be really a heck of a move, in my opinion. So let's not forget these. We'll be watching them more and more on a daily basis as we start doing the show, into next week. And we've got some interesting things that are happening there with the cycles in corn and wheat and beans.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Okay, folks, we're going to run through a few things here on the stock market just to see, what we're watching here. If we take a look at what we were looking at earlier in the week, we were looking at this S&P E-mini, and I'll put this up here so you can take a look at it. And then we will also update it here because we're still in the same area. We haven't taken out point D by any stretch of the imagination. So we want to be watching that one closely as we look at some of these stock market charts that we're following here this morning. Now, the next one, of course, that I would like to get to is what I think is the best value you can get going into this Brexit. And let me get this up here for a second, and we will get this ready here. Hold on, just got some good news. One of our good students just had some surgery last night, and they're doing really well, so that's a good thing. Hold on here, and we'll be right here to take a look at it. This is where, look, we've been down here for 2 weeks, folks, at new record lows. And boy, if there was ever a market that really is ripe to buy, it's the VIX. I'm not going to tell you where to buy it because it's probably pretty risky, but boy, that sure looks interesting. I will tell you that very, very interesting if that's going to be the case, whether this is going to be a major change in the VIX. But it's one of those things that looks extremely interesting. That's the understatement to the year. Now, another one that we're looking here, look at the Dow Jones. Let's put this up here so you can look. Just an overview. Shucks, just a second here. I got to do it a little differently. There we go. We'll take a look here at the Dow Jones Transportations here. You can see this is a butterfly top that we made back in February. That now completes the head and shoulders pattern where we were here on the 24th of, it's actually the 25th when we had the new moon. That was a head and shoulders pattern. If you notice, the right shoulder is far lower than the left shoulder. That is a very negative sign, and we've had very little rally after the 5 days down. So this is a very negative pattern in the Dow Jones transportation. Thank you for the comments, Mr. Z. But it's the calm before the storm sometimes is what you're looking for, and if it happens that way, that's usually a pretty good thing. So we'll see if in fact this is going to be anything that's going to be going on of interest anyway. So the main thing is that these markets do not look nearly as bullish when you look at the overall stock market as you're watching some of these things unfold. And remember, folks, the Russell small cap. Look how bearish this has been. You know, we came down, we've rallied up a little bit, but almost nothing. So these markets are changing. What would you call it? Not direction, but change of character. A little change of character here. And in other words, they were going crazy, you know, at one time, but now they're not nearly as crazy. Even when the news, the dynamics, very good, Tucker, that's the word I was thinking of. The dynamics of the market seem to be a little bit different. So we'll watch it very, very close. We'll see how this thing is going to unfold as we go through. Now, if we take a look, of course, at the New York Stock Exchange Index, it also is, you know, showing a very bearish pattern, and we'll put this up right now so you can take a look at it, and you'll see here again, this is also not a very bullish pattern, and it also, you'll see, that's correct, Marshall from the old Columbia River area of Washington has just told us that we have that adage to sell in May and go away. It didn't work last year. It worked in 2015, and it only works about 60% of the time over an 85-year period. So, you know, let the patterns decide whether the seasonal is going to line up. I watch seasonals in the grains incredibly often, because those are the ones that, you know, those are based on growing seasons. They go back for thousands of years. When you look at these, you know, clay tablets from the Sumerians and Babylonians that Dr. Andrew Lowe went through, they talked about these things and how they were related to the seasonal factors and what was happening as far as, you know, the planet Mercury and the full moons and new moons. So those are the main thing. The thing we've got going now, folks, is that we got everybody bullish in this market. I mean, you've got record margin debt. The percentage of bulls is not as much as before because the market stopped going up before, but it's still at a high level. But all these things they're skewed, and they're skewed to see that the dollar index would be going, you know, to an area where you'd be looking at, you know, a pretty big change in the VIX index. But the comments you're making about the Facebook and the, you know, the social networking, I don't do social networking, folks. I've never done a tweet or a twat or a tweetly dum. I've never done any of those things, and I know people use them quite a bit. And I know that things are happening on Facebook with these live things that they've shown, and that is really something that that certainly has to be controlled. So that's one of the things that we could keep an eye on. And someone's asked a question, do I look at the commitment of traders? Yes, I do. I use Steve Breeze's program to help me with that. It gives you, you know, a quick summary of what's going on. But every day, the one thing that I do is on the active markets, I go into the CME and I double check all of the open interest to see what's happening with open interest, just like I'm watching cattle very closely because of the fact that open interest is dropping and the cattle market is going straight up. That's a sign that the market is actually doing a pretty big run here as far as a short covering rally, and we'll see if this is going to be the case. So we'll have to do one thing at a time as we go through looking at each of these, but that's something that you should get interested in. It's really simple. You go to www.cme, Charlie Mary Entry, and .com, and that'll give you, just click on data, go to open interest, go down to what you want to look at, and it's right there. That's all the sum totals of the buyers and sellers, who's playing, and you know, what they're looking at. All that stuff is right there for you. So that's the main thing, you know, to keep in mind. And someone is talking about the bond shorts into the weekend. If there's an Le Pen surprise, folks, anything over the weekend will be a surprise. Bonds, euro, dollar index, you know, with maybe the exception of the grains, everything else will most probably be affected by a great deal. That's the bottom line of what's going to happen. Do you know why that's happening, folks? Because it's what you see on CNN, what you see on Fox News, it's what you see on CBS, NBC. They're all talking about it. So what they're doing is this is how they get people to come in and listen to this stuff. This is like, Donald Trump has probably been the greatest thing to happen to the TV networks since Mickey Mouse first came out. And so, this is why people watch this stuff, is because it becomes very entertaining, and there's always two sides of the story, and that's why people get excited about it. And Larry, you should get off your soapbox now, because we're coming in to another commercial. All right, we'll be back here. Oh, it's not happened yet. But anyway, watch these things. And on Sunday night, I will be there. Those of you that subscribe to 24/7 will be watching it really, really closely. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I'll finish up this segment of the show here with this euro that we've been watching for quite some time. I believe that we still have a chance for the euro to get up to this 110, possibly even 111 if the Brexit thing comes out. But it is basically still in a bear market. However, there's others. We just looked at the Canadian dollar. That's had a pretty good move since we've been on the air here. But if you'll take a look at the British pound, you're going to be seeing another same type of an ABCD pattern that we're seeing. And this is a market that has been in a bear market for quite a while. What we've done now since October, we've had a 9-month rally completing at a 61% retracement of a previous high up at this 130 level. So this is an area where you want to be watching the Canadian dollar because the British pound, because this should be ready to to be moved. Maybe the Brexit will turn into a Frexit, or the Frexit will turn into a Brexit. We'll have to wait and see. But we'll be watching, very, very closely. I think it's great that Tiger TV and Tom O'Brien and Tommy are having a Sunday and Saturday sessions for you folks. I think that's terrific. Nobody else is doing that kind of stuff. And I hope to, if I see something, I'm going to chime in and give my 2 cents worth. And remember, you buy what you pay for. So 2 cents is a fair price. Do not pay more than 2 cents. It's certainly something to really look at. So we'll watch those on Sunday night for sure. Also, keep in mind, folks, the corn market, I believe that we're looking at something incredibly exciting in the corn market that could be happening pretty soon. So watch that very, very closely. It's going to be really interesting, of course, to see how it's going to be transformed here, and we'll be watching it. Yesterday we hit that key level of 2379 in the S&P. Going below that would certainly be negative, especially in the context of the bullish number we got in the what do you call that thing? The bond jobs report. Live every day in an attitude of gratitude, and may God bless.
This Sunday, May 7th, the French elect a new president and markets and currencies around the world react. Tom O'Brien has just launched a special for Market Insight subscribers where he'll be hosting back-to-back weekend webinars to break down the market action as France votes and futures react. This Sunday night, May 7th at 5:45 p.m. Eastern Time, Tom O'Brien will host a special webinar as France votes and markets and currencies around the world react to the implications on the future of the EU and worldwide indices. The following Saturday morning, May 13th, Tom O'Brien will host a second live webinar for Market Insight subscribers at 9 a.m., breaking down the previous week's trading action following the election of a new French president, as well as what to expect as we approach summer trading. New subscribers will also receive a free copy of Tom's best-selling book, The Art of Timing the Trade, and this offer comes with a 30-day money-back guarantee. All the action starts this weekend, so sign up now at the front page of TFNN.com.